I definitely need to start getting more clued up with crypto and all that because I've really.
Well, it'll be on another big bull run in 18 months to 2 years, and it will go 10x. So a little bit of money in there will serve you well. But remember, when it goes to the moon, well, it won't actually meet the moon. It will go into orbit. You got to bail out at that point.
Yes.
You've got to do a Boomgarten and bail out with your parachute and get back in on planet Earth. No. Because it will go up like a rocket and down like a rocket. It's bound to be a repeating pattern.
So how do you like time it? So like, how do you know if it's too bubbly and you want to get
Well, you don't. And what I did last time was I was in at about 5,000 or 6,000 on Bitcoin. And I'm thinking, well, it's going to kind of repeat the process. It's going to go to 20, 30, 40,000. 40,000 I had in mind. So I'm going to get out about 38. So it goes ballistic and it's at 33 and it's thrashing around and oh dear, you know, you're sitting on a 5-6x.
Yeah.
And you're sweating.
Oh,
so I put my orders in at 38,000.
Right.
And it was thrashing around. I thought, I'm out, 34,000, gone, bang. So out I went, roughly in around there. And then I thought, well, you know, the thing to do is you reduce your risk. So you snap off, say, 20% of that profit, and then you go to the more risky end. So you go away from Bitcoin and you try to find some crazy little stuff that are going to go, you know, and if it goes the next leg up or just whatever it does, you're just taking some of your profit and you're putting it on stuff that's more risky, but you're putting less on. So if you lose it, you go, oh, well, and you're not crying that you lost it all again. And then if it goes ballistic like the other lot did, Bitcoin's going to go again, he's going to go to 100,000 or 60,000. That the crazy stuff won't just double; it will go up tenfold.
Right.
So you've got like 20% of what you've got with an upside of another 10x rather than 100x, and that's exactly what happened, fortunately. So things like Matic and Rarible, you know, so I went into those and they just did extremely well. So, but what you're doing, forget the names, is you're managing your risk. So you're in it at the bottom of Bitcoin. The only choice you've got to make is, do you reckon it's going to go up or not? You know, do you know in your heart of hearts that this is going to be big? Yes, right. So there you are, in at the bottom. Everyone's going, oh, woe is me, I bought 20, that's 3, and you don't care, right? And in fact, you buy more. You just don't care. Because remember, you want to buy when everyone else wants to sell. And it's even better when everyone else has already sold.
Yes.
And they're just saying, oh, it's the end of the world, it's going to go down more because I'm out and I've got rid of this, so everyone else is full. You're buying it. And then away it goes, and everyone goes, oh, what the hell's going on there? What? And then suddenly they get FOMO and pile in. And when the FOMOs are piling in, you want to be piling out.
Yes. Yeah?
Because you don't need to get the top. I mean, you can, but, you know, what do they say? Bears get fed, pigs get slaughtered. Or bulls get fed, pigs get slaughtered. So you just, and you go, now I can't sleep at night. Well, you want to get out. If you can't sleep at night, you should sell. It doesn't matter if it's going to go up more. You've had enough. There's always the next one. And there's always the next, and particularly when you're, 18, if you can say, I'm going to take 10 years to learn how to do this problem. And I'm going to do it with small amounts. So I'm just going to build them up in small amounts. And I'm going to play around with that and find where I can play around with it, but with real money. Crypto's good for that because you can go so small. Equities is, you need to be moving in at least £1,000 lumps, which is a lump, right? It's a lump when you start. But crypto, it could be a £5. Yeah, but you get the feel of the ebb and flow of things. You train yourself up. So you're 30 now, and now you have got a grand or two to start pushing about. And then you're 40, pushing about 15, 20, 25 grand now. Well, with inflation, probably a million. But, that's how you build it up. And by the time you're old and like me, you're a grizzled old veteran, and you've got a huge part of capital.
So would you advise someone of my age getting into this space?
Absolutely, yeah. Earlier the better. Oh, absolutely. You're late.
And like anything particular, or?
It's a skill game. It's an absolute skill game. So it's just like you were teaching yourself how to play chess or teach yourself how to play poker. It's a skill game. If you're gambling, you're going to lose. If you're playing, you're going to win. Yeah. So it's like the market will pay you in the currency you want to be paid. And if you want to be paid in fun, you won't get so much money. If you want to be paid in status, you won't make so much money. If you want to be part of a crowd, you won't make much money. if you just want to get paid in cash from profits and you diligently play that market, I don't know that phrase, but you diligently invest, you will make a lot of money, because most people aren't doing that. Most people are fixated by the gambling aspect of it all.
Yeah, no. And what would be your like 3 best bits of advice you'd give to any beginner looking to invest in crypto?
In crypto, play small, very, very small. Yeah. Don't believe anything or anybody. Yeah. If you think you know, you don't. If you know, you know, you do. Now, I learned that off a gold mine.
Right.
I was up to me nipples in a river, and he said, if you, oh, it's actually meaningless, but never mind, it's not so much fun saying it that way. When you're panning it, if you think you've got a bit of gold in your pan, you haven't. And when you know you've got a bit of gold in your pan, you have. If you think it's gold, it isn't. If you know it's gold, it is. And people go, what's it mean? If you know, if you think. But you know when you know.
Yes, yeah.
And if you think you know, you go, no. When you go, ah, ha, ha, then that's right. And, you know, that is always a good test of anything you do. If you think it's good, it isn't. And if you know it's good, it is. It's just that, you know, it's love at first sight. It's equivalent. You just know. Oh, yeah, it's that. You're, oh. And that's the same with the investments or with anything really in life, is that you know when you know. It doesn't come very often.
Yeah.
And when you're starting out, you've definitely got to have passed that test. And it's a skill game. It's a single player game.
Yeah.
You have to get good tools. You have to realize you're up against interesting competition.
Yeah.
And you just got to take it. You just got to build up your skill level by it's work. For me, it's not work. I love it. Yeah. I love it. It's like fun, you know. But if it can be fun, if it can be fun for you for financial reasons rather than for the fact that you're on some community going, oh, we're going to push the price of AMC to the moon. If you steer clear of that stuff and just do it as a mental task, like chess, then you'll do exceptionally well, because most people are just doing it for all the wrong reasons in all the wrong possible ways without any thought or practice or anything. It's just they're just lambs to the slaughter. But you don't have to.
Yeah,
you really don't. It's not that difficult. Actually, it's not that difficult.
Would you recommend anything in particular for people to actually get clued up with it? Like, how did you initially start? Did you read books about it? Did you read magazines? What was it?
You can't know too much. You can't know too much. And as I said, the level of thought that people put into this stuff, the level of effort and work they put into it is very low. So if you spent, I mean, you can say, I mean, do you watch television?
A little bit, not too much.
So if you spent all the time you spend on television on an open university course, you'd have that degree in about 2 years.
Yes.
Yeah. So it's the same with anything. I mean, you know, by the time you're 30, you could have 10 degrees. You could be a professor on the time you spend watching television.
Yep.
Right? And people never go, oh, bloody hell, what a great idea, I'm going to do that. They go, oh, I like my television. I only watch the sport, though.
Yeah.
It's relaxation.
Yeah.
And I'm sorry to all those people watching this. They go, yeah, that's me. That's me. I like my football. I like my relaxation.
It's true.
I don't want to be a professor.
Yeah. No, 100%. So
because you're an aspirational podcast, aren't you? So you're pushing out to people that they can achieve.
Yeah, and they need to put in the time to make it happen, essentially.
Yeah, work
hard. Yeah.
But I've got good news. It's only work if you don't want to do it. If you actually want to do it, it's actually leisure. Yeah. People get up at 4 a.m. and put on a small amount of clothes and a pair of training shoes, and they run around in the freezing cold for an hour. And that's what they live for. Yeah. Because they love that. Yeah. Running around barely naked in the freezing cold for 5 miles. That's most people's idea of misery, right? But for them, that's their leisure, and it's not work. It's their pleasure, because they want to do it and they enjoy it. So, you know, with a business, if you can do something you enjoy and get paid to do it, that's the best thing in the world, because you'll be very good at it too.